Okay, so pretty much everything we've been doing up to this stage is figuring out how best to allocate our costs. Um, and honestly, this is kind of what a lot of managerial accounting is about. There's so many different ways to try to spread your costs out and figure out how to allocate them that, there's like a whole course on it. I think we're learning at this point, though, that direct costs, so direct material and direct labor, there's not a lot of ambiguity about how you allocate those because they're direct. You can measure exactly how much materials and how much labor went into a given product. And so it's the factory overhead that becomes the ambiguous part, right? The part where we're having to make estimates or guesstimates as to how much of that factory overhead um, should be applied to the cost of any given product. We've already looked at job order costing, where we try to apply those costs on a per job basis or a per batch basis, might be another way of putting it. And we've looked at process costing, which I think most of you will agree was a little confusing. Like it was, whereas what we do is we just sort of try to add in those costs at each process level, which makes perfect sense until you start getting to these like partially completed ones and the equivalent units of production, and that gets confusing. So this is a couple of other ways that we allocate costs, specifically the factory overhead costs. Maybe. All right. So this is going to look at three different allocation methods, okay? The first is what's called a single plant-wide rate method. The second is a multiple production department rate method. And the third is what's called activity-based costing method, or ABC. ABC is good in cost allocation, bad with gum, all right? Do you ever have older brothers who try to give you ABC gum? I don't know, maybe that was just me. Hey, do you want my ABC gum? And you're like, yeah. And it's like already been chewed. And then he punched me. That was pretty much my relationship with my older brother. Um, dude, he's 5 years older than me. He would annihilate me. Okay. That's exactly what you do is you hit him back, then they start punching you, and then you're like, Mom, he's hitting me. Right. Totally. And if he really hurts you and you like start to really cry, and then he's like, shut up, shut up, shut up, shut up. I don't want mom to hear you crying like that, because he knows he'll be in real trouble. All right. Yeah, 5 years is not a fair gap. Okay. You lose that battle. A 10-year-old against a 15-year-old, you lose. All right. All right. See, well, that helps. All right. So let's take a look at each of these. See, these are the extra slides I would typically cut out because they're just like lots of text and stuff. So a single plant-wide overhead rate is really what it sounds like. And so far, really all we've introduced, where it's like they allocate costs on the basis, they allocate overhead on the basis of this, whatever it is, right? Machine hours, or the things we've looked at in the previous chapters. So this company, they manufacture snowmobiles and riding mowers in a single factory. They have a total budgeted factory overhead of 1.6 million and 20,000 total budgeted direct labor hours. So that's going to be their single plant-wide factory overhead rate is going to be 16 or 1.6 million divided by 20,000, which they'll compute this way. So they come up with a rate of $80 per direct labor hour. So again, we've already gone through this, right? In essence, what they do is for a given product, they're going to say, here's the direct labor we put into it, the direct materials we put into it, and then we're going to take the direct labor times $80, and that's how we'll apply or allocate the factory overhead to it. This is one way to do it. It doesn't matter which products you're making, it doesn't matter anything else. We're going to use this one rate. That's a single rate. No. No, the overhead costs. Yeah. So you're right, a good review. So overhead are those costs that we can't directly tie to a specific product. So we can tie the amount of hours the mechanics putting the whole thing together, right? We can say, here's all the parts we put into it. Those are the direct materials. But then there's like, what about the cost of the guy who has to, the janitorial staff that cleans up the whole plant, and the plant manager, and some of the supplies that are just always being used, like grease and rivets or something like that. But it's really hard to say how, I guess rivets, you could say how many go into each thing. But anyway, so all of this whole chapter is about different ways of dividing up that overhead. To this point, we've really only looked at a single plant-wide factory overhead rate is how we've done it. And then we looked at two different ways of applying that rate, one on a job order basis and another on a process basis, okay?
Would you add?
Yeah. Yes. So to figure out the total cost of the unit, we would take the direct materials, direct labor, plus the overhead that we calculated by doing $80 per direct labor hour. Okay. So the advantage of this is that it's simple. And we've learned in accounting that usually when things are simple, they create other issues, right? It's why we had to do that whole accrual BS in the first accounting class with all the adjusting entries, because otherwise you'd spend 250 grand on new computers and then take it all as an expense in 1 year. And then the next 4 years, you'd still have the revenue coming in, but no expenses to show for it. So so too simple all of a sudden doesn't help us to keep track of things. So the challenge is it assumes that the consumption of factory overhead is the same across products, which we know it probably isn't. And it doesn't always apply to companies that manufacture a whole bunch of different products, okay? All right, so we're gonna skip the checkup corners and look at the second method. The second method is is called a multiple production department factory overhead. So now in essence, what we're gonna do is we're gonna say each department is responsible for a certain amount of the overhead, and then they can figure out how to allocate it within that department, okay? So the idea behind that is like, maybe in your department is labor heavy. And so the best way to sort of divide up the amount of the overhead that gets applied to products in your department is by direct labor hours. But maybe in another department, they're not very labor heavy. Like it's a simple process, but it's the amount of machine hours that go into it that is the best way. So this lets each department sort of decide how to allocate their share of the overhead to the products that they work on. I like this. So it's like single has just one arrow, but multiple has multiple arrows. You're like, thank you, Cengage, like that, right? So all they're showing really is that with the single plant-wide rate, there's one rate that gets applied to the products. And then with multiple production department rates, there's maybe one rate in the fabrication department, another rate in the assembly department, et cetera. Okay, like what I just explained. Yeah.
It's like, say apply.
Yes. Yeah, no, so it's a good question, right? So again, I think I mentioned like here at the college. So we have all these overhead costs. We have a president of the college. Like which one of your individual educations, do we apply the cost of the president's salary to, right? We know the president does a lot of good things for the college. He goes and he lobbies Congress to ensure we keep getting state aid money. He goes and anyway, and so and we have the cost of all the administrative people over there and all of those costs. So the question is, how much should the business division be responsible for that overhead, right? So if you think about it, my salary is kind of like direct labor. I'm teaching students directly, but the president or the counseling department, it's more of an indirect labor. It's necessary for the operating of the, and so there'll be many different ways. One scheme would be to come in and say, let's look at the total amount of full-time student enrollment at the college, and then say, okay, business division, 18% of the college's full-time student enrollment comes from the business division, and therefore business division is responsible for 18% of overhead costs. And then we'll look at, with our area and say, how are we going to allocate that? Probably on the basis of student credit hours, the number, credit hours per student times the students, and so forth. In our case, a single plant-wide or a single or organization-wide rate might work for us because really our revenue generating areas are all academic areas, and it's kind of the same process in each area, but other businesses aren't. So anyway, that was a really long answer to the question, which is yes, each department may be allocated a different amount of that overhead they're responsible for, and then they may be able to decide within their department how to allocate that to the product as they do it. It's not easy. And it takes negotiation. It's almost like a negotiation process where the accountants are meeting together with the managers and saying, help us understand how your department runs so we can figure out how to allocate this stuff. All right. So Ruiz Company, remember they make snowmobiles. They have 2 production departments, a fabrication department and an assembly department. They're budgeted a certain amount of overhead costs. This doesn't tell us how they went about doing that, how they decided to split that. Often it's on the basis of just total production dollars, right? Like, you know, this department does 67% of it and this one does 33%. And so they do it that way. And then they decide, in this case, they're both going to use direct labor hours, but in fabrication, direct labor is heavier. So there's less labor hours per the amount. So it's going to be 103 direct labor hours applied, $103 of overhead applied per direct labor hour. And in the assembly department, it will be $57 of overhead applied per direct labor hour. This is a lot of stuff to just say under a single plant-wide rate, we use a single rate to apply how much overhead gets charged to a given product. And in a multiple scenario, we will use differing rates from each department. All right. That's confusing. I mean, not really, but. All right. So they have this whole section of like 5 slides. These are slides I would have taken out, okay, if I could get the computer to work correctly, that talks about the distortion of product costs. Really all they want you to know here in these 5 slides is that having a single plant-wide rate distorts product costs because it doesn't allow the managers the flexibility to demonstrate or to allocate costs on a basis that's true with how they're being used up. Does that make sense? That's all it means. And so I'm going to kind of skip through these and just recognize that that anytime we try to oversimplify something, it's going to cause some distortion, meaning it's going to cause our system to differ from the reality of what's happening. And then even on a multiple, you know, now we have a different allocation rate for each department. That's going to get us closer, but there's still going to be some distortion. And we're never going to have a scenario where we perfectly can identify how that overhead cost applies to any given thing, right? What we want to do though is get as close as we can. So the third method, and the one that most businesses use, is what's called activity-based costing. The idea is this: the more granular, do you know what that means in a business sense? The more granular we can get, the more down to the small level, the more accurate we can be with our accounting. So a single plant-wide rate in essence says, hey, we have this many direct labor hours at the plant, and we have this much overhead, divide the amount of overhead by that, and that's what we're going to apply. That's not very granular. That's not very micro. That's like this macro scale. We're just going to apply the same rate across all departments. Then doing the multiple method lets us be a little more granular or a little more micro, to come down and say at each department, let's let them decide the best way to do it. And then with activity-based costing, we're drilling down even deeper, and we're letting each department say, hey, what activities do you do in your department? And how can we use the activities you do? How do those drive your costs? And then how can we use those to allocate overhead costs in a more narrow and specific way? So we have a better sense of how much each department is contributing to the overhead of the business.
So the kind of gatekeeper on how we're going to sit down with the department and ask them, like, right there on the steps.
Yes.
Like the more detail you provide,
Yeah.
costs,
Yes. And so I'll tell you, for me personally, this is the type of accounting that gets me excited because it's half management and half accounting. So it's not just numbers. You know, to me, I enjoy going out and learning about new processes. You know, walking through, show me a day in the life of your department and how each of your functions works, where labor is input into this, where materials are input into this, how the overhead of management and all of those things apply. And then let's make a system that's going to get a better sense of how much overhead should be applied to you. Because here's the thing, when you're a manager and they use these single overhead rates, and you as a manager, your salary is often based on bonuses, based on profitability. And I'm having to pay a big chunk of the president's salary. And I'm like, why is that much of the president's salary being allocated to me? I think it should be this much, right? Um, I'll give you a real life example here at the college. So I'm responsible for multiple departments and multiple budgets. So in the business division, I'm responsible for what's called the BUA department, business administration. That's all classes with a BUA prefix. Okay. The BUS department, those are all of our AAS business classes, all classes with a BUS prefix. The SBM department, the AIS department, the CMP department, the FCR department, COE department. So I got 7 departments, all have separate budgets. Okay. We get this report each year that says, here's your cost per student credit hour. And then my boss is like, why is this department so expensive? Right? SBM, so small business management. It's an expensive department. And she goes, why is it expensive? And I'm like, I don't know. We're not spending crazy amounts of money. Our enrollment's normal and reasonable. And so I finally go in, I'm looking at the thing and it says salaries for SBM. We honestly have like 5 or 6 SBM classes. Salaries are like 150 grand. And I'm like, what? Where does that come from? I go in there and I look that it has my entire salary, including not only my teacher salary, but my division chair salary, because I used to be the SBM guy. Then when I got moved to division chair, they just left all of my salary attached, which I don't make 150 grand, okay? But then that includes all of the payroll tax they have to pay for me. It includes the ASRS, state retirement contribution they have to pay for me. And that all adds up to like 150 grand. Seriously, to teach 6 classes. Guess how many of those SBM classes I actually teach? 2. The rest I teach all these BUA classes. And so we had to go in. I'm just telling you the story because this happens in a real life $30 million a year organization. We don't have very granular control over our cost allocation. And so I had to go in and say, and I went to accounting and said, hey, this thing's all off. It's making it look like this program's way more expensive than it is. I'm teaching 2 of the 6 classes with adjuncts who are getting paid, you know, $2,400 a class to teach it. This should be a cheap program. And they go, well, there's nothing we can do about it. That's just how it's allocated in the system. I had to go to the computer and talk to a computer department and talk to the programmers and say, how does this allocation occur? Like, what's leading to my whole salary being put on here? Well, that's just the way it's in the system. And finally, I had to find the right guy, and it wouldn't happen without me chasing him down and say, if I submit to you an Excel spreadsheet that in essence breaks down each employee's salary by the departments. So I just went and looked at how many credits each. So if I teach a total of 17 credits and, you know, 6 of them are in SBM, then 6/17 of my salary should be applied to SBM, right? And I had to go through that process. And suddenly they're like, man, you've really got a good control on your, no, seriously. So management comes down and says, it looks like you've really cleaned this up. You really have good control over your costs now. And I'm like, I'm spending the exact same amount of money, you fools, right? I'm just allocating it differently. But remember that my bosses, you know, they're not fools. They've just never done accounting. Okay, which I mean, pretty much makes them fools. But no, really, they're not fools at all. They're intelligent people, but they've never done that. And so, you know, by us spreading that cost out, and what really I'm not worried about, I mean, I do like to look good, but mostly what I want to make sure of is we're accurately reflecting those costs, right? That way, because every year they make us do this thing called a portfolio, and they put those costs in there, and they'd be like, what can you say about your department based on these data? And it would piss off my boss, but I'd say, well, the data are inaccurate, so I can't make any generalizations about the department based on this data. And they'd be like, and that went on for 5 years of me putting, in essence, the data's not good, so I can't use it, before finally my boss was like, well, what's it going to take to fix it? And I'm like, well, letting me do a spreadsheet where I can, so what I'm telling you guys is this is for real. Go to FMI, Fortune 500 company. They do not have a great handle on a lot of their cost allocation. Some departments do better than others. They spend tons of money they don't need to spend, things like that. Okay, not because they're bad people, because if now instead of a $30 million a year organization like ours, you're talking about I don't know what they are, a $30 billion a year. That's 1,000 times bigger than us. Okay, it's just hard to get down to, because the accountants are working at this big macro level, and then they're kind of counting on people at the granular level. And guess who usually is in charge of the granular stuff? Managers, who were promoted from being workers. And so like in the maintenance and department, it's a guy who was a maintenance mechanic who's now the supervisor of that. He didn't know anything about accounting. He was out there and make sure the machines keep running, but as far as how to allocate those costs, he didn't know. Again, he's smart. He just doesn't do that. All right. That was a big speech about the importance of cost allocation. I could see that you guys are feeling it deep in your soul. So let's move on. So instead of rates, we're going to think about activities, and then we're going to come up with rates per activity rather than using any one. So an activity is a type of work or action involved in a manufacturing or service process. All right. So again, what we're going to do is we're going to budget overhead costs, and we're going to budget them on the basis of activities. And so instead of departments, activities. So here's a picture to show you. Previously, with multiple production department factory overhead rate method, we took departments and we budget on that basis. Here, we're going to budget on the basis of activities, which is what I just told you, but there's a picture in case that's how you learn better, I think. All right. So here's some ideas of what we mean by this. We know this company has 2 departments, a fabrication and an assembly department. In real life, the accountant would go meet with the managers of the fabrication department and say, tell us what your processes are. Tell us the things involved from the moment you get a raw material till you send either a work in process onto the next department or a finished good onto the finished goods warehouse. And for this company, they found out that really these are the activities: setups, quality control inspections, and engineering changes. Went to the assembly department. So they found out that for those 2 departments, that is what their activities are. Okay, again, this is fictitious, but in real life, what you'll find is that a lot of times multiple departments have similar activities. Okay, and so the way we figure out an activity rate is to take our budgeted activity cost and divide it by the total activity base usage. So let's get some examples. Yeah. All right. So it tells us, assume that snowmobiles are a new product for Ruiz. The engineers are still making minor design changes. Ruiz has produced riding mowers for many years. So we have these different activity-based usages. So for snowmobiles, they expect they're going to have way more setups than riding mowers. Why? Because it's a new product and they're still learning how to make it. You'll find that when you start making a new product, there's just a learning curve. And so you're going to have to changing equipment and stuff more often. Quality control inspections, again, 100 inspections for 1,000 units, as opposed to riding mowers. Again, why? Because they've been making riding mowers a long time. They know their process better. Engineering change orders, 12 to 4. So what we find out is that, let's see, number of direct labor hours used by each product is 10,000 hours. So snowmobile is doing 8,000 hours in fabrication and 2,000 hours or 2,000 hours in assembly, whereas the mowers are doing a lot more in fabrication. I mean, a lot more in assembly than fabrication. That's fine. All right. I'm going to skip past this again. So here's our budgeted activity cost. Fabrication is $530,000 in cost. Divide that by 10,000 direct labor hours, $53 per direct labor hour. Assembly, 7. Setups are $4,000 per setup. Quality control inspections are $3,000 per inspection, etc. Okay. In a book problem, they're going to have to give you all this information. Okay. And so again, in real life, we're having to figure out, well, how many hours is this? And how many dollars is this? And how do we apply this much per thing? Here in a book, it's going to give you all of this. So it's pretty easy actually, because it's going to give you all this information. The thing that's not easy is just like with this last chapter, it's like a lot of, you think about it, a ton of like information overload, and you're having to like wade through this and sort of categorize the information in the right areas so you can apply it correctly. That's what's challenging about it. All right. So our overhead costs then are going to be allocated according to these rates that we came up with back here. Okay. So the activity overhead allocated is going to be the activity-based usage times the activity rate. And then if we want to figure out our overhead cost per unit, we would just take the total overhead cost, divide it by the total units of production. So here they work it out. You can see fabrication, 8,000 direct labor hours times 53 per direct labor hour gives us a total activity cost of 424,000. Assembly, setups, quality control inspections, engineering changes, and then we get our total factory overhead costs. Now check this out. Think about this. If we were using a single plant overhead rate, both of these two divisions use the same number of direct labor hours, we would have split those costs right down the middle, right? So if it was, what is it, 1.6 million, we would have allocated 800,000 in factory overhead to the snowmobiles and 800,000 in factory overhead to the riding mowers. We'll talk about some, what was the term they used? You know, some really skewing of the numbers. Comes to find out, as we get more granular and start trying to assign these costs per each activity, that that snowmobiles are costing us a lot more. Probably why a snowmobile costs a lot more than a riding mower, right? Like, if I could buy a snowmobile for the same price as a riding lawnmower,
Probably would just push.
I would attach a mower to the back of my snowmobile and just drive it across my grass. Okay. All right. And yeah, I would tear it up on the bottom, but hey, they're cheap, so I'll just replace it after a while. Okay. So really our goal in real life is just to get down to this lower level of assigning costs so that our overhead usage will be as accurate as possible. This will help us then in setting our actual prices for our products when we sell them to customers, right? If we have a more accurate understanding of their cost. It might, for some businesses, it might be pretty close, right? Different, again, for some businesses, it works better than for others, just depending on how much real variation there is in it, right? Because they were using the same number of hours. And so you'd be like, well, this makes sense, but not realizing that in those hours, they were having a lot of engineering changes, and engineers are highly compensated people, and it's costing us a lot. All right. So you can see with single ride plant rate, factory overhead allocated to a snowmobile, 800, riding mower 800. By using multiple production department rates, the snowmobile was 938 versus 662 for the riding mower, and under activity-based costing, 1294 to 306. And so this leads me to wonder if they went to some system that was even more granular, broke it down even into more parts, if more of that cost would shift towards snowmobiles. Here's the thing with accounting, or with really anything that has to do with these sort of applications, is being more granular down to the smaller level is typically better until the cost of doing that, the cost of trying to make it narrower and narrower, starts to exceed the savings you're going to make by the increased accuracy. And so, you know, activity-based costing is kind of, I think, at the sweet spot, meaning it's appropriately granular, but not so much more work than like a single rate that it's not worth it. Okay. Because you could keep drilling down and be like, no, within each of those activities, what are the activities for setting that up? And then trying to allocate the costs out to that. But at some point it gets overboard. All right. So again, sort of the dangers of product cost distortion. With the single plant-wide rate, we would underprice our snowmobiles and overprice our mowers. If we're underpricing snowmobiles, guess what'll happen? More people want to buy them because they're cheap. So now we're selling the low cost one and the low profit margin one and not selling the ones that we're helping cover our costs. Okay. With activity-based costing, it's going to give us just, again, I don't know that we need a slide to describe to explain this, but in essence, knowing what our costs are is going to help us price products appropriately. And then that's going to impact that we're going to be selling the right product mix and so forth. All right. So selling and administrative expenses can be allocated. They're often not. Okay, often they're just sort of put there as a single cost, but you can still use activity-based costing if you want to allocate those selling and admin expenses too. Again, what you might find out is some products require a much more expensive marketing campaign than others, right? Marketing is not just advertising, but it's also the cost of getting stuff shipped to places and so forth. Let's say you make one product that's really heavy, and so just the cost of getting it shipped places is much higher. It might be worth it to you to say, let's drill down here and see if there are costs involved that are radically different for these two products, and if we need to adjust them to apply selling and administrative costs in a different way rather than just equally. So again, I'm going to skip past these slides. Just know that you can use the same principles for selling and administrative costs, and then we can use the same principles in service-based businesses, right? Even though we talk about manufacturing, same idea, like I mentioned here at the college, we're a service-based business, but should all divisions be sharing the burden of the overhead in the same way? That's a question worth asking ourselves. And this is just an example. Again, I think it's enough to know that the same principles can apply to service-based businesses. So I'm going to skip past those. And I think last part, okay. So the primary use of activity-based costing or any of these costing systems is to improve our knowledge of the cost of the product, which then is used to improve our pricing and price setting on the product. You know, and again, so that is give us this little example. Honestly, what I like to do is just like when we do, like, if you remember, like the horizontal and vertical analysis of the income statements, I like to do a horizontal analysis of the activity-based costs. So I can start to track changes over time, right? And say, what's happening here? Are these costs getting out of control? Remember that a controller, which is a head accountant, is usually in charge of sort of keeping things on budget and in control. And so to track your different costs across time can help you take a hard look at them. So now we look at these and we're like, oh, well, setup costs dropped. and moving costs dropped. And so then the question you start asking yourself is, why did it drop? And what can we do about that? How can we keep it dropped, right? And did it really drop, or did we just reallocate the cost to another department, which isn't a real savings for the organization, but it's a value because at least it makes things more accurate. So again, these are all the things we're doing with these things in real life is direct labor, we can measure, direct materials, we can measure, but overhead has to be allocated. And the ultimate goal is to allocate it in the most efficient and accurate way possible. And that's all. And that's plenty for a new chapter. So I believe this chapter will actually be a little easier than the last one, as far as I think the last one just had a lot where you give this giant worksheet. And this is going to have that too, because it's accounting, but I think it's a little better laid out. Are we good? Any questions? I know that was a lot. All right. I appreciate those of you who put in the effort to stay awake during that entire presentation. For those of you who slipped a little, I still love you. Okay, I won't take it personally. But have a great day. Those of you who have my class next, well, sorry, you'll have to deal with me again. I'm sorry for being so awesome. I can't help it. It's just me, just who I am.